Hi everyone, Willem D. Ritter here with Compass. Happy holidays. I hope you're all enjoying this time with family and friends. Well, it was a wild year in San Diego real estate. The start of the year was by far the most lopsided seller markets I've seen in 15 years of selling homes here. Well, as inflation took hold in the third quarter of this year, we saw interest rates dramatically rise. We started out around 2.5% to the low 3% range for interest rates. Well, now we're up to the 6% range. That's a dramatic increase in interest rates, and affordability went way down as a result, down 31% year over year. With a shock like that to the housing market, you would think prices would have fallen off a cliff, but it just hasn't happened yet due to our extreme lack of housing inventory. However, we have seen prices pull back from the highs earlier this year, but just not as significantly as I would have thought when rates really started to rise. At the end of the year, I think we'll still be net appreciation positive by a few percentage points. Right now, it's all about inventory. As of December 22nd of this year, we have about 2,030 detached single-family homes for sale and about 960 attached condos and townhomes. I'm excluding manufactured homes and mobile homes. That kind of is a little bit different of a segment. That equates to 1.5 months worth of housing supply. And I've said this before, but in a more normal, even market, we see 4+ months of housing supply. So we're well below that. That is just so few homes for sale. It's really hard to comprehend. And because of that, I do not see prices pulling back much further from when they are now. So what are buyers doing to combat those high interest rates? Well, many buyers are doing what we call a 2-1 or a 3-2-1 buy down. And that's to say, let's say interest rates right now are 6%. If you do a 2-1 buy down, again, this costs money, your interest rates for the first 2 years would be 4%, which is 2% less than what a normal rate is. So 2% less for the first 2 years and 1% less for the next year. So the first 2 years would be 4%, the third year it would be 5%. And the goal is that you're assuming interest rates will come back sometime in that 3-year period where you'll be able to refinance into a long-term loan at a much better rate, therefore dropping your payment in perpetuity. And some buyers are not doing that at all right now. They're just taking the higher interest rate. They're trying to get the best possible price on the home that they can, being in a little bit slower market. And they're assuming that they're going to be able to refinance sometime in the next year. Many institutional lenders think we'll see interest rates pull back by the summer of this coming year. So here in 2023, maybe by May, something like that, we'll see rates jump back down, hopefully into that low 5% range, maybe even a little bit lower than that. The next big question is inventory. When will we see more homes for sale here in San Diego? Well, we don't have enough land to build new homes to keep up with demand. We do have a little bit. There's some new construction in North County, North Inland County, Escondido, San Marcos, even Fallbrook, and then way down south in Otay, Chula Vista, places like that. But as a whole, we don't have nearly enough space to build new construction to keep up with demand. And on the resale front, meaning homes that are existing and being resold, many of those are being passed down generation to generation, and people are living longer, so they're staying in their homes longer. So that's really creating a low inventory situation that could play out for years and years to come. So I don't expect all of a sudden this massive influx of homes to hit the market unless something catastrophic happens to our economy. A lot to digest. If you have any questions about any of this or anything real estate or homeowner related, please reach out. Let me know how I can help you. Thanks for watching and happy holidays.